gosh. All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. It is Wednesday, July 12th, 2023. Thank you so much for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time here on the YouTube channel. Make sure to subscribe if you haven't already. Like these videos, comment your questions. Love to answer and hear from you guys. This channel is for you. All right, let's go ahead and get around the horn here. Dow futures up 203 points, NASDAQ up 0.92%, S&P 4507 up 0.77%, the Russell up 1.46%, 1955. Yields are down 3.919. The dollar is down. We talked about that yesterday on the Morning Note, that the dollar going down is going to boost equity. Starting to get a little bit of a leg higher here on the hourly. 101.19. Once it breaks below 101, it's good night Irene for the stock market bears, because that means we're going to get to 100. And what happens when you break 100? We know the psychologically satisfying, Dewey Decimal System, everything's 10, the top 10, 10 best dressed, that stuff. Well, yeah, once you start breaking 100, that's a big psychological number for traders. So you break that down, well, I guess all-time highs this year doesn't sound so crazy now, does it? 1403 on the VIX, down about 5.46%. Crude oil, we entered a long last night or yesterday on crude oil. I told everyone to get out just for the fact that we had CPI. So there was a couple of points made. Again, you have to be safe. I wrote it on the blog that I thought we were going to go higher anyways. But again, when it comes to being, a signal provider or helping others, I have to be cognizant of risk always. Me personally, I had some risk ahead of the CPI number. I know where we were going to go. So, I mean, that's only me. That only affects me personally. But when it comes to the audience, when it comes to our members, I have to be always weighing the risk and the consequences. Because again, I could be wrong. Yes, I've been wrong a lot in my life. That's completely normal. But again, me being wrong is one thing. And then me being wrong and you guys losing capital, that I won't not be happy with, especially if I can control it. The risk side. But in regards to the market right now, again, it's really based on that CPI number. Let's go ahead and get to the blog, and we'll go over the number together. And again, guys, if you're not part of the market blog, you're really missing out. I put out information and news that is really only reserved for high net worth individuals that are invested like a Merrill Lynch, a Morgan Stanley, or a Goldman Sachs. I literally see reports on Twitter from Goldman Sachs, on the Bloomberg, and so on and so forth. Again, I give that information for you guys for free on the blog, just to kind of show you guys what kind of community we have. Or if not, if you don't want to be in our paid service, that's completely fine. At least take advantage of the information and make your own decisions. That's the key. We want to have information to you guys so you guys can make your own either investment decisions or trading decisions. Been up since 6 a.m. We talked about JPM's game plan for CPI there. So again, in terms of the CPI figure itself, here it is. We had a 0.2% month over month on the headline. The expectation was 0.3% year over year basis. I wanted the 2.9%. We got 3%, which is still better than expectation. So, I'll take it. No problem. I thought we were going to get that 2.9. Core came out to 0.2%, expectation of 0.3%. But the year over year on the core, again, that's excluding auto, food, and gas. Again, that's at 4.8%. So again, we're continuing to go lower. And that's a good sign. It's still keeping the same thesis. Lower dollar, lower yields, lower inflation, like we talked about in Q1. So again, good numbers all around. We are above 4,500. I also talked about this morning on the blog about that, the initial pop that you get in the morning, that's kind of a place where you want to kind of unwind your longs. Why do I say that? A lot of people are probably going to take profit for those who took the risk of trading the CPI number. So first thing this morning, best thing is to go ahead and get out of any longs you may have. If you still have Mara with me, I told everyone yesterday to close it just in case. Again, I have to be worried about risk. I don't know if everyone took it. I held, and I even said I held. Here, I'll even show you guys. You don't have to take my word for it, right? Let's see. So Mara got to 5%. And again, okay, guys, decision time. Again, it's important to let you guys weigh your decisions. Mara's 5% in the money. If you're worried or want to close up some risk, Mara here and move on, leave a runner if you like, give everyone the option. Personally, I'm going to hold it, which I did. But again, it's at your discretion. It is a signal to close just to mitigate risk for you guys. Everyone is different. So again, I am holding for CPI. I'll take that risk. Here is Mara now at $18 per share pre-market. Sometimes, guys, risk needs to be taken. The problem is that people put way too heavy position sizing. We're talking about putting the mortgage on one, trade. You don't need to do that. But again, this is important. We got to stay balanced. Anything can happen. Remember Thursday. Thursday last week can humble even the best traders. But hey, you got to stick with it and kind of learn from it moving forward. Again, for all we knew, the CPI number could have been hotter than expected, but and we'd be tanking right now. But as you see in S&P 500 futures, we're getting that push higher. I would like to see a retest of 44.80 and hold it. I want this level held as support. Then I know for a fact we're going higher because this is just the breakout, the CPI breakout level, 44.82, 44.80. I expect us to get a little pop in the morning. We'll probably pull back here into this zone, 44.85, 44.80, just because everyone's going to probably unwind their longs. The only issue that may change this is the fact that we just get an ignition of buyers coming in, a short squeeze, where all the bears say, good night, I'm done shorting this market, and we're going to get to 45.50 in terms of resistance. That's probably unlikely. I'd probably give that about a 30% chance. I think that we retest 44.80, and we'll kind of hang around between 44.80 and about 50 or 45.10 or so. Here is the exact message I sent to the blog regarding that. I even put it on threads. These initial morning pops are best to close longs any longs that you may have. 44.80 retest on ES, which is the CPI breakout on the 1 hour. I want that level defended by buyers before adding any risk, and that's really it. Again, we could get this short squeeze ignited, but we get below 101, you're probably going to get to 45.50, which is great. And again, all-time highs, guys, is not too far away. Let's not go crazy in terms of, hey, we're going to tank right away. 45.50, 46.40, very key level. You start breaking that, not everyone's a bull again. I think all the bears would probably be dusted by then. That is not a bear market rally by any stretch of the imagination. What else? Let's answer some questions. What up? Good morning. QQQ is above 370. Yes, it is. So I have an alert at 372.26. If we break that, that's where you want to go long. I think I'd rather go long NQ for futures instead of QQQ, but you can do QQQ as well. The only issue is that you have PPI tomorrow, and we got a Fed beige book today. Not like it matters. So really the issue now is the market is pricing in that more than likely the Fed is not going to go above 25 basis points in 2 weeks. Let's see, with all good news, we would have no rate hike. And then the pause becomes a pause again because August, there's no meeting. What do you think about BYND long term? Do you think it's cheap at this price? This is beyond meat. Beyond meat, just like the high betas, they're going to squeeze higher, like your Carvanas of the world. I prefer to just trade Beyond, and I have. I wouldn't want to own the stock. Why I say that? Because it's extremely discretionary. You're talking about, vegetarian, was it vegan or non-meat, meat, whatever. Again, that's an expensive delicacy to maybe a majority of Americans. It's cheaper just to get hamburger, obviously. The way I see it, I think Beyond is more of a luxury brand than it is a staple. So I would rather pivot away from a Beyond and use that thesis of, a stronger consumer. Inflation goes lower. They're going to go to the higher labels in terms of, goods or stuff. So, you're going to get less likely the Publix brand of Coca-Cola or soda. You're going to get Coca-Cola. So, that'll help those kind of brands marginally. But, if there's a name here that you should be looking at, it's Nike. I think Nike would be in that thesis of a stronger consumer is going to go for the higher brand label. To me, Nike is still the best in sportswear in the S&P. Beyond, I'd rather trade it. I'd rather not own it. Let's take a look at Tesla. Tesla was price upgraded today. Let's go ahead and expand this. All right, what do we need on good old Tesla? Tesla, I need 284.25 to break. And then once we do, we're going to go to 300. I'll do the 300 calls. That was the one I missed out on last time. What do I think about Shack? Shake Shack. Again, another high beta discretionary. You're above the 20, you're above the 50, 100, and the 200. In terms of resistance, you're talking about possibly 81, 82 as resistance here, at least short term. Would I want to own it? No. Do I think it goes higher? Yes. So I'd rather trade this name or like swing trade it rather than actually own it. And again, just for restaurants, I mean, restaurants are extremely cyclical. They're very volatile. I mean, if you're going to go for restaurants, there's really, to me, there's only two that are the best. It's Darden Restaurants, which I'm not a huge fan of, the stock. It does move a lot in terms of volatility. McDonald's. Just keep it simple. Buy McDonald's. You're not going to get a ton of growth, but man, you're going to get a consistent yield and a great chart on the daily as well. So I think McDonald's is a better play than Shack. I'd rather trade Shack. I'd rather not own it. Whoa, anything to do with Meta above 300? Yes, you have a gap to fill here at 317. If we're expecting momentum, if the dollar continues to break down below 101, I would take a look at the 310 or 315 calls for Meta for next week. But you have to close. Let's see if you can close it before then, obviously. The trend is higher in Meta. I think Meta fills that gap to 317. Let's take a look at the options market this morning and the price action, and we'll see what we decide. The upside target, Joey, is 317 on Meta. You got a nice upward move. I think they were price upgraded as well. Here's the gap fill, 316.64. So 310s to 315 in terms of call strikes for next week would be prudent. I would not do it for this week. Sure, you'll get momentum, but again, you have risk with PPI and your premiums might get smoked. Thoughts on Apple? Apple is simple. Just own it. Don't even think about it. Just own it. Very easy to just do that. In terms of trading it. Trading, we did break below 187. I was looking for an alert below 186 to target 183 for puts. Didn't happen. Very difficult to short this market, mind you. We're still above the 20-day moving average, which is important. So again, until we break that, it's still going higher on Apple. Thoughts on Carvana? Again, Carvana, Lucid, and Tesla are, well, other than Tesla, that's not high beta. Carvana is breaking out, guys. I mean, pick your horse. ARKK is breaking out. I mean, at the end of the day, ARKK, you got until 52. And you're breaking out. So again, I think ARKK is a great setup for longs. I'll keep an eye on that. Carvana is a breakout in terms of what target is. You have a target of 54.61. That's a lot of upside we could play on Carvana. That's definitely on my watch list. Again, I just need the options volume. They were a little pricey yesterday. I was watching it. Lucid. Lucid has a gap to fill here at $10. Again, I don't know if the option market has any volume with the stock. I'll place an alert at 8:35. If that breaks, first target being $9.16. Break that, you have the $10 gap fill on Lucid. Any futures direction today, Carlos? Yes, sir. The futures direction, in my opinion, is that we'll pull back to 44.80 if we get a pullback in the market short term initially, which we usually do. We're starting to push higher now, guys. Once 101 breaks, you're going to go to 45.50. That's basically it, as long as you stay below 101. If we break 100 today, okay, then we're talking about 4,600. I know, relax. Let's see. Lucid is pulling back this morning, by the way. But yes, I do expect us. What was the person? Benjamin. Benjamin, it's simple. We're going to hit all-time highs this year. Been saying that. I said that a couple weeks ago. So again, I'll see you at 4,800. How you want to slice it and how long it takes is really up to the market. Indicators that I use is the 100-day, the moving averages is what I use mostly. I use fibs as well. Let's see. Morning, Carlos. Baba. Baba was price upgraded as well this morning. Need a break of 95. That's the June highs. Again, let's take a look at it. We're above major moving averages. So above 95 would be a good level to go ahead and target 100. And again, you're above the 50, the 20, the 100, and the 200. So Still more upside room on BABA. Thoughts on SoFi? Lending costs so ease of money more accessible? No, guys, it's simple. Those high beta names, high growth, people say it's junk or meme names. That's just capital flying to more profitable enterprises. If you notice, the value names like Coca-Cola, Dow, Boeing, those names were kind of weaker towards the seasonally time when tech was stronger. What you're getting is lower rates, lower yields, lower dollar. Capital is going to go ahead and fly to more speculative stocks, let's just say. Has SoFi, Mara, Lucid, Carvana, have they changed anything fundamentally in the past 3 months or 6 months? Nothing has changed. It's just that we have ETF'd pretty much everything in terms of the high beta names. So they all move in tandem at the end of the day. If Palantir's up, guys, SoFi is going to go up for the most part. If DraftKings is up, more likely Carvana is going to be up because these are high beta names. They just kind of work all together. DraftKings would be my horse. Yes, good old DraftKings. And I've been trading this for a while now, and right now it is trading at $30. I saw a lot of volume on the 31s yesterday for this week, but we're starting to get that push now. I just got an alert on Dow futures. We're starting to break the June highs. Let's go ahead and take a look at it here. Here's your zone that I marked in terms of YM, starting to break the December highs. And right, we're going to, in this zone, in terms of resistance, is 35,543. We're at 34,705. I think with a break of 35K, I think I could go long. You know what? We'll do 34.8. 34.8 would get us comfortably in that zone. And then we can actually play longs on futures with the Dow. We can do micros as well to around 35,534 in terms of a swing. So again, you're just kind of breaking out, guys, and this is your zone. So the 4 hour looks so much better, but kind of have inverse head and shoulders, huh? Higher we go, higher we go. Yes, and good question on IWM. RTY, in terms of the futures market, this is RTY Russell 2000 futures. It just golden crossed. So once the golden cross happens, that's usually a bullish sign. That's when the 50-day moving average is above the 200-day. That is a change in trend. Small caps are going to rise. Just giving you a heads up. Target for me is 2,050. Would I jump into this trade now? No. We're going to see the open. We're going to see if anyone closes their longs, and we will go from there. But how nice. Lower inflation, lower dollar helps. Come on, 101, break for me. DraftKings to the moon. I am IWM breaking neckline. That's right. And again, guys, here's your chart that you need to be watching if you want stocks to go higher. You want this to break, or continuing to break. We still got $100.80 as the level of support. That was the lows of February. That was the lows of April. So again, as much as I love this price action, I need that dollar nuked. I need that dollar nuke to $100.80 to break. See you at 98. Once 98 breaks, good night. See you guys later. Bye-bye, Bears. You're done. One question, how do you pick an option contract? I always take a look at the contracts with the highest volume. At the end of the day, guys, we want to buy something that we can sell. Again, we're not investing in options. We want to buy it and we want to flip it. Treat it like a Tinder date. I just want one date with you, get what I want, and bounce. Sorry to be crude, but that's the facts. That's how options are. I want to marry my stocks that I own, but I want to date my options in terms of just dating them. Hello, goodbye, see you later. Bye-bye bears, because the stock market bears would really have no recourse when the dollar continues to fall and the stock market keeps going higher. Remember the inverse correlation we spoke about yesterday. And how's dollar? Dollar is right now below 101. Awesome. Guess what that means for the stock market? Yep, you guessed it. We talked about this yesterday, guys. I put a reel up for you guys. Google has an inverse head and shoulders, or a cup and handle, whatever that you want to call it. Everyone likes different ways to call it, but yeah, it's up. I mean, stocks are up. That's not a Google thing. Google didn't change overnight. It's just Remember, guys, we have commoditized stocks into ETFs. So if one sector moves, all the stocks are going to move in that sector. And they just jumble them up. I'm telling you, Lucid did not change their complete business model in 3 months. It's because Rivian's going up. It's because these stocks are going up. They're all bundled together in a sense. They may not move one for one, but if majority is green, you know why. Has nothing to do with anything in their business model, or they just got smarter overnight or made more money, because we know that's not true. Oxy is going to break out and energy is going to kind of go higher. Why? Because crude oil is going to go higher because dollar is going down. So again, energy bulls are going to be happy. They're not going to gain as much as tech bulls, in my opinion. But Oxy, you hit some support here on 55. At least you'll be a shareholder with Warren Buffett, which is always nice. Oxy long, you're above the 100-day moving average. You're above the 20. Yeah, if you want, I think energy is going to go up, period, because the dollar is going to be lower. So again, that's kind of the prism or the perspective you need to take a look at. Well, guys, thank you so much for all the questions. I haven't had these many questions in a while. ARKK, $50 calls have volume. Again, we talked about that. Of course it's going to go higher. ARKK is going to go to 52.67 if the dollar continues to fall. Did Cathie Wood get smarter overnight? Did her investment returns get better? No. Again, just commoditized with the market because the dollar is lower. That's all. Try not to overthink it. Have a great rest of your day, guys. Guys, thank you again for the questions. Thank you for being on the channel. Appreciate y'all. Have a great rest of your morning. Enjoy your gains if you have it. And we will see you guys tomorrow for the next morning note. Cheers.